With this, ladies and gentlemen, we are starting with our next panel, which is emerging opportunities. We're the closest to our target of 100 lakh crores, and for us to reach this target in the most optimal way, we need guidance on how we can align ourselves to reach the most ideal investor segment with the right product. So our panel of experts are here now to help us with some insights that will make it easier for us to reach the target. For this, I'm going to invite our moderator on stage first. May I please invite Mr. Khatri to join us? He's going to be moderating the session. Would you please, with as much energy as you have, come on, put your hands together and let's welcome Mr. Khatri as the moderator for this session. A very good afternoon, sir. Thank you so much for joining us back. Our first panelist joining us here is Mr. Ankur Thakore, CDO L&T MF. He brings with him a rich experience in the mutual fund industry with around 25 years in sales and distribution, channel management, portfolio management services, and product development across organizations. He has a love for data and passion for number crunching. He believes data analysis tells you what you should do next in a very strategic manner. Thank you so much for joining us here, sir. Please have a seat. Would you please join me in welcoming him with a huge round of applause? Okay, the energy is great, but I'm sure that we as an industry coming together here for the Confluence can do better. So whenever we introduce our panelists or anybody, at the back also, we want everybody to make sure that you give them a very warm reception. Our next panelist joining us is Mr. K.S. Rao, Head Investor Education and Distribution Development at Aditya Birla Sunlife AMC Limited. He has been instrumental in setting up the award-winning function at the organization, helping grow its reach to more than 10 million investors and 50K plus channel partners. He was also instrumental in setting up Nippon Learning Academy, an upskilling platform for channel partners. Thank you so much for joining us here, Mr. Rao. So nice to have you here. Our next panelist joining us here is Saugata Chatterjee, is the Co-Chief Business Officer at NAM India, has also successfully built the SME and HNI segment under his different roles and leadership responsibilities over the last 5 years. The distribution team has come a long way with increased focus on opportunities, strategic approach, and sharper execution. He was with Reliance General Insurance when he was instrumental in setting up the business channels and headed the channel sales during the period of 2005 to 2009. Next, ladies and gentlemen, our last panelist joining us is Mr. Saurabh Jain, the Chief Marketing Officer of Union AMC. He is a BCom and MBA in his professional career of more than 21 years. He has worked with IDFC Investment Advisors Limited as Associate Director, Standard Chartered AMC as Assistant Vice President, Institutional Sales, and Birla Sunlife Distribution Limited in their institutional sales team. I'm going to hand over this session to the expertise of our panelists and our moderator. Over to you.
Okay. Now, the title of our panel discussion is Emerging Opportunities. Seen against the context of our theme, which is marching towards rupees 100 lakh crore, we are going to be talking about what are the opportunities in terms of products, in terms of segments, in terms of business strategy, what will be the role of technology and all that, how many distributors do we need, how many investors do we need to reach that particular hallmark. So for that, I have this august panel with me. So let me start straight by asking a question to Mr. Rao. To me, it looks like the mutual fund industry has pretty much maxed out on the kind of people who have the wherewithal to invest in mutual funds. So where will the new set of customers come from if we have to reach 100 lakh crore?
Yeah. Thank you, Prem. And before we start, good afternoon to everyone. And thanks for Cafemutual for having me here. Thanks, Prem, Anita, and entire team. And I'm glad to see each one of you after long, a couple of years back, we would have met in a meeting like this with a full energy, and then the entire hall is full. And so glad. And looking forward for this emerging opportunities. I was just looking at it. It is a post-lunch session, and I consciously sat on the right side of the Prem. I thought he will put less questions to me, but the first question has come to me. Then here is an answer. Here is we can look at. And where is the next customer comes to us? Probably next customer comes to us from every household. And every household, I mean, for us, Har Ghar Mutual Fund, that should be our theme. Har Ghar SIP is our theme. That's in fact, I run one campaign called For Her. This is to make today being a Karwa Chauth, happy Karwa Chauth, and this is making every woman empowered for the financial education and financial inclusion. And I look at where the next customer comes, our own household. You know, how many of us have went back and asked the woman at home to have her own folio, her own SIP account, and if we educate one woman, I think we are educating entire family. And I personally feel entire household to come, that real segmentation can come from the women segmentation first I look at. And the second one I look at, in the morning we are looking at one of the datas, millennials and Gen Z. I think these are the guys whom we need to capture. And probably some of them, they're very active. And earlier we thought they are the spending generation, but now they are looking like not a spending generation, they are very saving and smart generation. And some of them, they have already like burned their fingers thanks to cryptocurrencies of the world. That is an opportunity for all of us to get connected. Today, the Gen Z investor is looking for an MFD to be available and support. I mean, I see many of such cases where they lost quite a good amount of money and they need an advice today. And that is the and the last segment I look at is to be retirees and retirees. There's a huge money available there. I think if you are looking at, I'm not looking at 2030, I mean, I'm looking at 2047, if we call Amrit Kal for us, and this is an Amrit Kal for not only for India, it is an Amrit Kal for MFD, and probably these three segments, we cover everyone, and then we can have celebration of Gar Gar Mutual Fund.
Okay, so you've said we will have women, you said we will have generation, and you said we will have retirees and about to retire. Okay. Great. Saugata, if we were to look at it in terms of a different approach, which is from an economic strata-wise, do you think there's still a lot of people left in the entire hierarchy of the Indian population who have not been covered by mutual funds?
Yeah, of course. So thanks, Prem and Cafemutual for hosting such events. Houseful event in a volatile market really shows that, you know, all are optimists in the room. See, let's look at the facts. We have more than 10 crore demat account holders. These account holders have come in and you know, increased the capital market base in the last, say, 2 to 3 years. MF industry is still around 3.5 crores. So automatically there's a gap which all of us have to bridge. That is the immediate gap of investors who are in capital markets but not into the MF space. So 7.5 crores is the opportunity with us. Let's take the second data point. And it's very interesting. Almost 18 to 20 crore working population has come into our country in the last, say, 10 years or 10 to 15 years band, which have been in the, people who have been in the range of age bracket of 22 to 50 years. So that is the working population which we have got in our country. Data shows that in the next 20 years, another 18 crores of new generation is going to come in and start working and earning in India. Now, can we imagine if 18 crore new investors and new population, this Gen X, you know, coming up and then they start working, that's going to be a huge captive, a huge, you know, investor base which all of us have to work on. Now, if you keep aggregating this, this moves to something like 25 to 30 crore, maybe potential as well as current investors, which you know, all of us need to work on and get them into the MF industry. The scope is large, you know, and as we go into interiors of India, the scope becomes much, much larger because yesterday, day before yesterday, I was with the head of sales of one of the large broking firms. What he was telling me is that in the next 5 years, this 10 crore number in demat account holders will now move to 30 crores. Can you imagine? Amit Bivalkar mentioned some time back that net sales has only been 1,000 crores in his firm. So नया पैसा अपने को लेके आना है, but then we got to have that vision to forecast that there is so much of you know, client base still untapped in India, who are still earning, still getting into multiple you know, parallel markets. That's the potential, I think, Prem. it's very much in front of us. We have to work towards that.
Okay. And if we have to work towards it, what is the kind of messaging which needs to go out? Mutual fund sahi hai ka phase 1 khatam ho gaya, suppose. What is going to be the theme which will extend the campaign?
Thank you very much, Prem, for having me here. Just to continue from the two people as what they are saying, in terms of the target audience, one big target audience which both of them highlighted is the new set of people which are coming in.
Yeah.
So the mutual fund Sahi Hai gives the campaign credibility to the product which is mutual fund,
Yeah.
which means that you are at least excited enough to come and explore that. What next? I think that is what is going to be the more important facet from a communication perspective. And that communication not just necessarily be from a TV campaign perspective, because your TV campaign is going to be only 30 seconds at best to explain something. And hence, trying to then get deeper into Sahi Hai for what, and what all are the areas where mutual funds can facilitate you. Mr. Rao also mentioned about retirees. And I think that's one area which typically is dominated today by insurance. Whenever the first thing which comes in minds of investors, where should they start investing if they were to retire? Insurance companies have taken that space in a very, very big way. The first policy is always taken from LIC or any of the private sector, thinking that this is my retirement corpus which I'm building for next 25 years. People rarely do it as a risk mitigant. I think the communication from mutual fund on that part needs to get enhanced quite significantly, because today what we talk about more from communication is what's here and now and how this product is very convenient to trade, so on and so forth. But it doesn't leave an impression of us being in a position to build a long-term wealth creator product. Value Research has this one very simple calculator on the website, which says that if you were to invest X amount of money in SIP for X number of years at Y percentage, you get this as a corpus. Unfortunately, we've not got enough number of customers which have experienced that journey. Even today, while Chatterjee represents an organization where they have track record which is in excess of 25 years. And they talk about the product where they say that this product has created X amount of value, say 200 times, 300 times, 1,000 times. But how many customers have actually experienced it? Very few. I think the communication change which needs to happen from our end is that if I am going to be the solution for you, it's not just for the near-term products, but it's also for the long-term products. I think these are the two areas where I think from a communication perspective needs to change. The mode of communication which needs to change for the Gen Z, I think that's the most important part. Today, when I look at my generation, and I'm the one who's least present on any social media, the only social media presence, if I have to say, I am on is WhatsApp. I have nothing else. But that's not how my kids behave. My daughter, I've got two daughters, one is 15 and 18. If they have any problem in life, they don't come to their parents to ask, they Google. So new set of customers are also going to be on that platform. Today, we are probably not addressing that very well. This could be a bit of a... So when I look at the digital platforms which have been successful, whether it's Grow, Paytm and the others, they have been successful not because they are free. In my opinion, they have been successful because they have been able to reach the mass.
They've been targeting the right audience.
They're targeting the right audience in the right manner. So the audience which we are trying to target needs to have a different communication in each of these spaces, and that's what we need to evolve as an industry. I don't think we've reached there. We need a lot of work to be done on that, and I think that's how we will be able to tap into these 10, 20, 30 crore customers which are coming in.
Okay. We have a lot of MFDs in the audience here. They are distributors. And what would be your message to them in terms of how to acquire and approach and acquire a new set of customers instead of doing business which is with existing customers and the referrals given by the existing customers? How do we tap a new audience altogether?
It's a tough one for me to answer. Honestly speaking, not because I don't have a theoretical answer, but I have very little practical experience. People are sitting in this room are fairly successful people and they've done a great job of acquiring customers. So you can't teach a teacher But what I would like to say here is if you were to talk about the third segment, in terms of the audience, which is the new set of people, then the conventional way of communication doesn't work for them. So if we are not digitally inclined to prospect new customers, then we should not try and go to the segment which is young. Then we should only stick to the retirees and the more older set of people. But if you're wanting to go down the path of going to the absolute young set of people, then there we will need to change our way of communication. The second part which I would like to say there is in terms of our approaches, we kind of do one kind of communication to everybody. Now, if we have segmented our customers and if we are able to do tailor-made communication to each segment, that surely helps us from acquiring customers. Because if you were to talk about going and catering to the retirees, then that communication is very different from a guy who's 25-year-old who's just got into his new stream of income. And how do I convince him to be dealing with me? They are very different ways of approaching. That would be my a little 2 bits on it. There are experts sitting out there. I think they would be far better in answering this question.
Okay, let me also add, Prem, to this, and maybe Mr. Rao is also more competent to add. I think, see, out of the 300 odd friends who are here, I can see Gajendra here, many successful partners who have actually expanded the market in the last 3 to 5 years. I'll share my experiences when I talk to them. I think first thing is create your own brand and make your brand very, very strongly visible in the market. See, we are all individuals. We don't have a corporate brand to back us up. But it's very important either digitally or through some means to make your brand presence felt in the market. Second is how do we, then reach out to the investors. There are so many passionate distributors whom I know, even during COVID times and now, of course, and in the past, they have continuously been conducting investor awareness program sessions. Identify your audience, your niche market, either retirees or youth or whatever is the segment you want to cater to. We have Dr. From Goa, he caters to youth. If you identify your segment, go deep into that, do continuous awareness programs, make your brand visible, add value to them. Definitely those new investors will start coming to you, and that's the way many of our successful distributors have grown their business, and that probably model can be expanded digitally. You can keep using various means to expand, but we have to reach out. We can't sit in the office thinking that someone will come and door knock and probably ask for a mutual fund investment.
Okay. Saurabh, you're associated with Union Bank. You have a very strong bank. It has a widespread network of branches across the country. What have been your learnings about reaching this particular audience for mutual funds?
Thanks, Prem, and thanks Cafemutual for inviting us over here. And I think it's a question which I hope you will ask me, because when you look at when I joined this company, it was called Union KBC, and our model was that we had to work with only Union Bank of India for the first 7 years. Now, I've never worked with a PSU bank before, and when I looked at the regions which were there, so there were 64 odd regions, and out of which 40 of them I've never been to in my life. Right? And when I started moving out to those regions, and these were places in eastern UP like Azamgarh, Ghazipur, and we realized that over the period of time, our market share went up extremely high from these places. And then we dig deeper, 70% of the KYCs were made by us. These were the investors who had never invested in mutual fund before. Right? Now, there's a big growth potential which I feel also can happen from beyond 50 cities. I'm not even talking about T30, B30. There are cities beyond B30 where money is there, investment money which can come in the fund. What we need over there is more distributors to come in that market. Because if you look at these markets, there are hardly any big distributor, or the spread of distributors is very, very little. That is why even mutual fund on their own cannot reach out to this market. They rely on distributors. Now, if distributors are not operating in that market, even though it can have potential, it will never be met. So when we worked there 7 years, we realized that there's a big potential, the money is there, which can come in the funds, right? Now, banks have a limited way in approaching client because it's one of the areas for them. But if more distributors come in over there in that market, I think rapid growth can come in. Second, highlighting from Ankur's point on the communication on the product, I also feel that, apart from the product communication, we also need to identify the product as retail HNI. Because what is happening is, as an investor, when you talk to a common investor and you go out, he is baffled with the choices. Right? He has got ETFs, passive, active, sector, thematic. Now, every product is not meant for everyone. For most of the retail investors, I personally believe that 4 or 5 products, the basic products are good enough. And as an industry, we should try to make our communication more strong on these products for people to come in. The reason why SIP became a movement in India is because of the customer experience. Right? A distributor selling SIP, the chances of a customer having a bad experience over a long period is very little. Similarly, if I can do it for 3, 4 more products which have a probability of giving a decent customer experience and less volatile, I think that can swing the boat for us in the next 5-10 years.
Now, I'll take a cue from Chatty on retirees. One of the things that I've noticed that both about to retire and retirees constitute a big segment. Do these people deserve a different kind of a product? Because at least insurance is ready with an annuity kind of products which come with a guaranteed rate of return, which good or bad gives them a lot of reassurance that their money is safe. So do we need a separate kind of products for the people who are about to retire and the retirees?
No, very much, Prem, because if you see the age band of the retirees now, and they have created wealth in the last, say, 20-25 years. So they have grown in a regime where fixed income primarily was fixed deposits and insurance was the primary industry from where they accumulated wealth. The other part was PF, which is their retirement benefit, which comes to them, which is again a fixed income, it's a fixed income product. So as an asset management industry, we have to probably try to give them these sort of options which makes them get into products which are more predictable, more long-term with less volatility, having the purpose, what is the purpose for which the investments will come in. If he is a retiree, can there be the product should not be for retirement because he is already retiring. It should be more to, make him get the cash flow, his monthly sustenance starts getting built. So this industry has to start thinking on those lines. I think insurance industry has cracked it very strongly. We have a retirement fund, but somehow we could not scale it up. We still want to scale it up because somewhere we still feel that as mutual fund distributors to these retirees, we try to give them aggressive products. We got to give them products which are more in the lines of fixed income, maybe target maturity funds, which have started becoming the flavor of the mutual fund industry now, can become the way forward for this category. If they start seeing predictable returns, they will start probably committing more allocation to our industry, and maybe the risk profile can be changed. So there is a need for our industry to think differently, make them give products which are more predictable and more goal-oriented, because their goals are different. Once they reach 60, 65, their goals are not retirement. It's post-retirement, sustenance, etc., etc. So there is a need for us to think differently. Then that mass population will start coming into our funds industry and probably scale up our business.
Now, one of the things that everyone keeps talking about is, have solution offer products as solutions. But we don't seem to have made, it doesn't seem to have gained any traction. For example, Chatty himself said that their retirement product, in spite of the fact that it comes with tax advantages, right? It comes with tax advantages, and it hasn't seen the takeoff that was expected of a product like this for a major category like retirement. Why do you think this is so? And what needs to be done to overcome that?
Yeah. I think, one on the retirement planning, we have only 3 funds in the country which is dedicated retirement planning, and like we tend to, it's all again, we need to own the blame at both levels, at manufacturer level and at the distribution level, because we always focus on what is currently on, and we look at very short term, and we need to zoom out. Today, when we are talking about 100 lakh crores opportunity, or our Prime Minister talks about Amrit Kal for India 2047, can we zoom out and how we can do? And here comes an advisor role to play. Probably, as an advisor, if I have a role to play, there is everything available at a mutual fund basket. And as Ankur said, mutual fund sahi hai. And today, mutual fund truly saral bhi hai. But how I can match this sahi and saral, what is sahi hai for my customer? And each customer, this morning when Amit was talking about personal finance, there is a person before the finance. And each of them were needed different solutions. Even the risk profiling is very different, mindsets are very different. If we can become little bit on the retirement advisory side, and we can plan it rightly, even we can create a business model with a retirement planning, I can be a sustainable MFD business, not for this generation, but it can be a coming generations too, because that's a huge money to plan. In fact, we are organizing, sorry for taking this little time out, we do work with my group, Aditya Birla group. Today we do run a programs for them. The 55 to 60, there is a different retirement planning session, and 45 to 55, there is a different session, and 35 to 45 and 25. Means somebody who is starting at early, we can have a different solutions. Probably as an advisor, if I can look at how I can bucket this rightly and give that solution centric from each of us can develop a model. In fact, Prem was, precursor discussions, he was also telling how the business models can evolve for us. I was just looking at, based on the questions he sent to me, I was reading one article which is at Harvard Business Review. This is a disruption innovation at play. And today that's disruption for our business, though we are small or big, it is there for us. And if we can evolve a model, honestly retirement planning, and this can become bigger planning, probably from now on, if we can plan 3 things rightly. I was looking at, we always criticize for this TER. TER has become a negative word for all of us. And this TER we can convert on the positive side. The first T is you can plan for the tax planning for your investors very rightly, because recently when I was looking at people post filing the ITRs, they need more assistance in the tax planning, because it is making, that's the need of the advisor has come, first part. And second part, COVID has taught us estate planning is a great opportunity to do the business. Third, retirement planning. If you don't want to talk the TER of a negative term, convert that into a positive term of TER. Every MFD can become tax planner, estate planner, and retirement planner. Okay. Probably for the claps, there is no income tax, we can have more.
Okay. Okay. Now, do you see, he pointed out 3 opportunities, TER, he said tax, then he said estate planning and retirement. So what are the other opportunities that you see in this market for distributors?
I think opportunities everywhere to take on Har Ghar mutual fund. The point is today we are so underpenetrated. From a mathematical perspective, it's a no-brainer. You throw a dart anywhere, you'll find a customer. The challenge for us is on 2 counts. One is that for especially a new person who's coming into this business, is sustenance for only doing mutual funds in the initial 1, 2, 3 years is a tough ask from what it used to be earlier, because there is only trail income. So if somebody goes and sells a 5,000 rupee SIP today for a customer, which is supposed to be a decent size SIP, what he makes in a year doesn't even cover for his auto fare to go to that customer. And hence it defeats the purpose of putting that effort, or it hurts them. But the way I would say it is that if you were to be in any business, it's an investment which you make for the first 2, 3 years. So when you get into the business, what it looks like to be a model today If you want to do pure mutual funds, then you need to have a 3-year plan of putting certain amount of capital aside, using that to build into the customers. I don't think customer is a challenge. Is the intent which is the big challenge for a lot of new set of people. For people who are already existing in the business, it's the great time to be in. The fact of the matter is that we've grown from 1.5 crore customers to 3.5 crores in matter of 5 years' time. I think the pace at which we will grow from this 3.5 crore customers to the next 10 crore customers will be much faster than what it has been in the last 5 years' time. The point is, how much are we participating in that is the question. Now, how much of these 2 crore customer could have come through the digital platform, and which could be something which people can keep on arguing, that there is no money which they are making, and that's the reason the customers are coming on board. But the fact of the matter is that they've got that customer on board. Can we reach them, enrich the value which the platform offers versus that what we offer to them, and get them into it? So that's one tap which you need to kind of get into. And the other is, how do we then get the next set of young audience to work with us? And for that, there are multiple ways you can go through. One is colleges, schools are a great place to go in, tap that. You can have a differentiated strategy as a distributor itself. You can be a kind of a quasi manufacturer which creates its own USP, and that's the reason people come to you. You need to have that X factor. The norm, gone are the days where people will just accept your form and you sign off, because the new set of people ask far more questions than the older generation. And if you want to cater to them, and this I'm talking about not just the ones who are 18 to 25, but even the ones who are in the 25 to 35 age bracket, who have decent amount of money, they are not just going to take us on face value. So what is it that we bring to the table is what is going to be important. So it's more to do for ourselves as distributors rather than it being the audience. Audience is everywhere. You go into a building today and ask anybody, how many people are there in mutual fund who have invested in a good classy building? I don't think it will be more than 25-30%. The balance 75% is there for us to tap into. It's just the intent which is required to get there.
If I may, there's this sandbox, activity which is happening in the MF industry. I'm sure all of us would have heard. Just to add on to what Ankur says, this is what the industry was always proposing, that how do you get more feet on street working for the mutual fund industry. I think SEBI gave a permission to the AMFI, and all the AMCs have been now asked to appoint interns under the sandbox program, wherein new to mutual fund industry distributors can come. They will be trained 1 year as an intern by the AMC, and then they will be open for becoming an entrepreneur under the open architecture platform. I can for sure tell, and there are many of our AMC friends who have started the recruitment process. We have recruited 300 such new MFDs in the industry in the last, say, 45 days. They have come in. Their training and other handholding is happening. We are getting people from all walks of life. So there is a clear intent for people to come and start working in our industry. There is a small support which the industry, which the AMC is going to provide to these distributors. With that small support, we have got 300 potential MFDs for the future in this industry. I think that's the way this industry can expand.
But the target is 5 lakh.
That target is 5 lakhs. So many of us, we have to keep adding that passion to keep acquiring such guys.
Okay, Saurabh, what has been your experience in motivating people to join as mutual fund distributors, whether they are with an existing organization like Union Bank or otherwise?
So, yes, we all are trying to get new distributors and talk to them. Now, one of the biggest challenges that I think the new distributors face is that how will we survive for 3-4 years, right? Because mutual fund is a trail commission, right? And while traveling, and like Ankur said that all the mutual fund guys are expert, and I can't teach them what works. But I can share with you what few of the people told me, an established distributor. I took their help to understand how to get new people in. They said you have to motivate them to do combination of mutual fund, corporate deposits, other product. So there's some upfronting which can happen to them. Mutual fund, there's no upfront. Some products may like a corporate deposit of a bank, but that's how they can survive. Otherwise, the longevity becomes a question. If you look at the data, how many distributors are there? About 10 crores of AUM. And if you remove the, family codes, that number is very small in all this year. The second data, slightly off the topic, but I thought I'll share with you. As per the June report of AMFI, when you look at the aging of the equity assets, while distributors have done a fantastic job in last few years where the selling model has changed to planning, but still only 44% of the AUM is beyond 2 years, in equity. And bulk of the money gets moved either into different schemes or they go out. That data is not there. And while we were talking internally and trying to deliberate, also what happens is what we realize as an industry, what we can do along with the distributor, and we require distributor help in this, the form that we have for the investor to fill in, it should capture more details. The form is very basic. It says this is what you invested, this is what you got. But if you can capture what is my target units in like SIP, and the distributor can get it in a statement that this is what the investor wanted, rather than just a valuation.
Okay, we are running out of time rather. And what I wanted to do is finally give 2 pieces of advice to this audience on how they can contribute to the 100 lakh crore journey. 2 pieces of advice.
First is stick around in this industry. It's a great industry to be in. Don't get out of it. And second is, you don't have to be just hopeful of getting to that 100 crore. It is definitely happening. So how much do you want to participate in it? In the sense, I want to have X percentage of that market share is what you have to set yourself as a goal. And I'm quite sure all of you all will then be able to achieve that market share.
Agree with Ankur. So if you look at last 20 years, 20% CAGR, right? Even if we take mark-to-market component for next 5-10 years and include that in the growth, it will be a phenomenal industry. So just staying around long enough and making sure the investor stays for longer period will make sure that we reach there.
Okay, now, Mr. Rao, you have to give them advice which is beyond staying there. आपको कुछ नया बोलना है.
And for me, the 2 pieces of advice is very difficult because I normally tend to speak a little more. And this morning we were talking about AI and ML. The first piece of advice I can say is don't worry about too much about artificial intelligence and machine language, which will be taken care at a broader level to make things simplified. But what you can focus on other AI and ML, that is AI is advisor intelligence. Your intelligence is far superior than artificial intelligence, and focus on that and make that stronger. And ML is not the just mutual fund language. ML is a money language. Money language is simple. आज मुझे बचाओ, कल तुझे बचाऊंगा. And let us make everyone is a saver in the world. And that's the first part. And having come to the Cafemutual, every time we do this program called Learning from the Masters. And I always say Cafemutual, that CAFE can become always an acronym for me. And if you want to develop a business model for you, that C stands for customized business model, because model, what Gajendra does is very different from the next person does. Probably I can follow Gajendra, but I can create my own model, the customization, which I can look at. And second, the A stands for me. Today, what we are here because of the service delivery. Your approach to service delivery should be integrated into the model. Third, we are all here, said and done. We need our fees to be right. And the fee structure, how you want to earn, what you want to earn, keep that in place. And the last E is end customer is most important, not the manufacturer. Please take care of the customer. Then business is here to grow. And Sankalp se Siddhi, we are at 100 crores, 100 lakh crores, we are looking at 40 lakh crores today. It's a 2.5 times of what we are. Whatever the AUM today of you, there are at least dozen MFDs today here, 1,000 crores. Each of you can make that 2.5 times. This industry is naturally 100 crores, 100 lakh crores. And all the good luck to you. And happy Diwali in advance.
I'll ask some questions. You have 1 minute, right? How many in this room, all our distributors in the room have recruited professionals in the last, say, 2 years in your company? Few hands. The first approach, please expand your team. Please ensure, if you have to grow your business, please invest in your business by adding talents. Don't shy away from adding talents. Second question, how many of the partners in this room have their siblings who have come into this business? Either son, brother, good hands are coming up. I know there are younger population also here, but I'm sure if you all can start building legacy in your own business, that's a great way of expanding your business, because the ethics, the culture, and the way you all have conserved your clients, if that can be carried forward in your family or in your business, that can be the only way you can expand your business. So I think it is within us how we can build our business and expand. That's the only way we can create that 2.5 times delta of mutual fund AUM.
So great. That's a great point to end with, that you must have your own team, your own family. So with that, we come to the end of this session. Thank you for your patience, and a warm round of applause for this audience.